Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, private equity, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion, the CEO and founder of Flying V Group, our digital marketing partner. Robb, how was your week?
Week was great. Yeah, excited to be back here, Gary. But yeah, having a pleasant week and excited to continue the momentum and steam with I think what we have going with the five things, which has been really great over the last couple of weeks, seeing the exposure and people sharing content and information.
Yeah, it's been terrific. We've gotten amazing feedback from people. And I will tell you confidentially, this week's version was very easy for me to write because I was doing podcasts and webinars all week. So the content was pretty much there. I just wrote it itself. I basically just recorded the discussions I was having with other people on camera.
Great. This week we've got an awesome issue. We're calling it the all NVIDIA all the time issue, which obviously, if you're in tune with the market, NVIDIA had earnings last week, which continue its impressive pacing. So we're going to be talking about that. You had a guest, Dr. David Glancy. We're going to be talking about, I'm sure, some of the conversation you guys had in some other podcasts, as well as looking at Walmart, talking about the Fed higher for longer, as always. So coming with you with another great episode of the five things for this week. Ready to rock and roll, Gary?
Let's go.
Point number one of the five things: NVIDIA delivers the most important earnings report of all time.
Yeah. So, this is what everybody's been talking about for weeks. The company makes the best graphics processing chips and cards in the world. They started as this amazing manufacturer of graphics cards that were used for gaming, for video games. And then when crypto mining became a big thing, it turned out that the GPUs were better at that than the CPUs. So the graphics processing units made by Nvidia were better than the central processing units made by like Intel or AMD. And so they had another huge leg up in sales there. And then it turns out, for the same reasons, as Nvidia's cards were great for crypto mining, it's because of all the parallel processing. And you know what? That turns out to be the thing everybody needs for AI, which is that's the big thing right now. And so, on one hand, you have this ridiculous hyperbole. This is the most important earnings announcement of all time, and it's kind of ridiculous, except it's actually probably true. The company again crushed earnings expectations, crushed sales expectations, gave guidance that was again above street expectations. I think the estimates for this year have quadrupled from where they were a year ago, something like that. It's just been this juggernaut. It's a weird combination, Rob, of a company that has leading product, phenomenal leading product actually in the hottest area of the market, and their sales, they're selling into everybody. So it's the best product in the hottest area of the market. And it's basically become a meme stock as well. The stock is up like 10x from a year ago. It's just been on an incredible run. And when they announced earnings, it wasn't just the US stock market that took off. Worldwide stock market indexes were all up. It actually may have been the most important earnings announcement of all time.
Yeah, curious, Gary, like what a competitor thinks, right? Or even how the market reacts to such a dominant position that NVIDIA obviously has, with clear ability to continuously perform over and over and over again, and also working with some of the largest corporations in the world as well, right? Your Googles of the world, car manufacturers, etc. So what does that do just from the market? Is it a good thing? Is it a bad thing, right? With so much consolidation, it seems like in such an important category within one particular organization.
So right now, they are clearly at the top of the game. There is nobody that's even close. With that said, and with that has come huge revenue growth, massive margins, enormous earnings growth, and a stock price that's just gone through the roof. With that said, though, this is the technology area and the technology hardware area. No one has ever been able to maintain any kind of long-term advantage here. There are other competitors that are taking aim at Nvidia. Are they going to surpass them this year? No, not this year. But nobody in the hardware business manages to hold on to a lead like this. There was a time, if you go back 75 years ago, when it looked like IBM, would have that part of the market sewn up. There was a point where on the software side, people thought Microsoft would, be inevitable forever. But, I'll also remind you that there was a point where people thought that that Xerox, right, was going to be this incredible company forever. It was
Right.
they had a huge stock price. And now go find a copy machine, let alone a
Right.
Xerox machine. The one comparison that I think is really interesting is people keep comparing Nvidia now to Cisco
Mm.
back about 25 years ago during the dot-com boom. And I think it's an interesting, smart comparison that I also think is wrong. And I was talking about this. I was on Tony Nash's show this week, Complete Intelligence. And it's a great show. And Tony asked me about this, and it made me think about it. The reason I think it's a smart comparison is because Nvidia and Cisco, they're both the pick and shovel guys, right?
Right.
Cisco was selling the servers that everybody who was building out their first internet capability, that Cisco was where they went for those servers. And so, Cisco wasn't trying to design the internet or come up with new websites, but they were selling servers to everybody who was. So, it's like selling picks and shovels to the California gold miners 150 years ago. NVIDIA is like that, right? They're not trying to be the leaders in AI. They're enabling it, and they're selling to everybody who wants to do anything in
Right.
AI. And that part, for that, I think it's a smart comparison. The place where I disagree is Cisco's customers were a lot of the early dot-com companies that didn't have business models, that were just cash burning excuses to try to put eyeballs on things. Whereas Nvidia is selling to the largest tech companies on the planet. These are companies with massive
Right.
amounts of revenue growth, lots of free cash flow. And so, like the stock line on this is, would you rather sell to Google or to pets.com?
Right. I think that's an obvious choice that we have there.
We'll let the
Moving on from
viewers draw their own conclusion.
we'll let them do that. Moving on to thing number two, going back to the Federal Reserve. If you've been watching Five Things, we've obviously had the consistent issue, the inconsistent issue. I think consistency of all sorts is maybe the theme of the year so far. The Federal Reserve again surprises everyone by being consistent.
Yeah. So, for the people listening to this who don't follow this stuff, in great detail, the Fed gets together, a certain number of times a year, and they have, their meetings. They're not monthly meetings. They meet less often than that. And then about a month after they have their meeting, they release the minutes of the meeting, and you can read through them and get a little more insight onto what they were thinking. So typically, when they have their meeting at the end of the 2-day meeting, they tell people we're keeping rates the same, we're raising rates or lowering rates. They give you the decision. And then Powell takes a press conference where everybody asks him the same question, and he pretends that, he doesn't want to strangle the reporters for asking him the same thing again and again and again. You can see his irritation growing as the press conference goes on, and it's sort of become a sport. But what's interesting is a month later, they release the minutes, and you can read more of what they're talking about and what they mean. And so last week, the minutes came out from the January meeting, and somehow people were surprised that the Fed made it clear they weren't even considering lowering rates right now. It's not even on the table. They're not about to pivot to lower rates, which is what people have been looking for at this point for almost 2 years. And the thing that I find really interesting is somehow about twice a month, everybody is shocked that the Fed isn't reducing rates. And, the easiest job in the world has been standing here saying, yeah, higher for longer. They mean it.
Question, Gary, just for those that are unaware, when we talk about, the Fed making a decision, right, or pivoting, what exactly goes into that decision and how is that talked about? Is it voted on, just for the viewers that might be unaware?
Yeah, so there are, I think it's something like 17 members of the committee, but only 13 of them, maybe it's 11, 13. I don't remember the exact numbers, but a subset of them get to vote. And so they look at lots and lots of data. But the key data that they look at is inflation, unemployment, and economic growth, right? Those are the key. And for inflation, it's not just the CPI, the Consumer Price Index. They'll look at the PPI. They're looking at producer prices, things like that. In general, if you have high inflation and a roaring economy, they're going to raise rates to try to take some air out of inflation and slow the economy down. If you have low inflation and a weak economy, that would cause the Fed to reduce rates to try to spur more consumption and get prices up and give people an incentive to start to manufacture again and start to buy again. And so that's typically how they think about it. But, where it gets complicated are kind of those in between places. Now, I don't think we're in between right now. The GDP numbers, I think they're fake, but they're good. The consumer spending numbers, they're, insanely good. And inflation is still too high, but people are arguing that it's going to come down. And, what they've said, what people are saying is, so, inflation is coming down, and because Fed policy acts on a lag, we're going to be in a recession. Okay, fair enough. But, Rob, one of the things people are going to see in the next week when we put out the monthly letter from DKI, I I disagree with the notion that we're about to have a recession. I think Congress is spending so much. I think this is unwise. It's stupid. But Congress is spending so much and the Treasury Department is monetizing so much that I think, they're unnecessarily stimulating the economy and leading to more inflation. And as long as that's happening, it's going to be very hard for the Fed to lower rates. And yeah, we've had disinflation. Inflation has come down, but I think a lot of people don't really believe that prices are up only 3%. And, it's not only 3%. That's the Fed's mandate is stable prices, which really should be 0, not 2%.
All right. Thing number three, shifting gears. I love this actual thing in terms
Yeah.
of the headline. Is green energy really red energy? You recently had a webinar with Dr. David Glancy of the Institute of World Politics. We're talking uranium here.
Yeah. So I'm very fortunate. One of the members of the Deep Knowledge Investing Board of Advisors is Dr. John Lenchowsky. He was President Reagan's national security advisor on the then Soviet Union. He was part of the policy, one of the architects that helped the United States win the Cold War without firing a shot. He's a remarkable person. And he was a founder of the Institute for of World Politics. And one of his economics professors is Dr. David Glancy. I have spoken with him on camera a number of times in the last couple of years. And Dr. Glancy is phenomenal at the intersection of geopolitics and economics. He's incredibly knowledgeable. And what he was pointing out is that here in the United States, we're trying to make the shift to green energy. And he's pointing out that, hey, the batteries for these electric vehicles, which is really the most valuable part of an EV, those are manufactured in China, and a lot of the lithium is mined there. And the components for the solar panels are made in China largely. Components for windmills are largely made in China. And so what he's pointing out is that we have a situation where our transition to green energy is really just moving a ton of business to China. It's really red energy.
Yeah, it's so interesting. That was the point, that the takeaway you gave me, right? Was we're kind of shuffling deck chairs in a way, right? In that, okay, with being and having these green initiatives, we're just actually moving what would be the opposite of green initiatives to a country with less any sort of initiatives or regulations that even exist on the books. So quite the dynamic there.
Yeah, Rob, you're right. And a lot of this is a net negative if you're an environmentalist. And the reason for
Right.
that is, while the US and Western Europe are trying to make this transition, China's building coal plants. And, manufacturing in the United States and in Europe tends to be as environmentally friendly as it can be. Obviously, any kind of production is going to have an environmental impact, but there are a lot of regulations and people take this stuff seriously here. You outsource this production to China and they simply don't care. And so what we're doing is we're pretending that we have green energy, but what we've done is burned a whole bunch of coal and diesel fuel mining and producing these components in China. None of this is a net positive for the environment. We're just pretending. It's like saying, an EV is a zero emission vehicle. That's zero emissions at the
Right.
tailpipe, but you use a whole lot
Right.
of diesel to mine lithium, and these things don't power themselves either.
Yep. Actually, anecdotal data here, but was having a conversation in an Uber in here, California, in Southern California. I was talking about with energy rates and the spikes that we've seen over the last couple of weeks with obviously the rains and storms and everything else. Full charge on an EV vehicle is actually right around right now about the same price as fueling up with gasoline. So super interesting. And takeaway, you said if you want clean baseload generation without the emissions, nuclear is your best option. So obviously, followers of DKI know the position in regards to uranium, and be sure to check out some of those recommendations that Gary has on the website.
Yeah, I think my
Moving to
second largest
or sorry,
position, sorry, Rob. I
oh, you're
think my
good.
second largest position right now actually is in uranium. It's either my largest or second largest position, depending on the day and what's up and what's
Sure.
down. Um, and that position is more than doubled for us here at Deep
Yep.
Knowledge Investing. I think there's more to go. This is going to be a long-term trend.
Great. Thing number four, lockdown darling stock Roku gets slammed by their Walmart acquisition.
Yeah, so let's talk about Roku for a minute. They made their name as one of the early manufacturers of streaming devices. They basically had a device that was maybe the size of two decks of cards, and
Mm-hmm.
you'd plug it into the HDMI port of your television, and you could either have wired internet or run it off of Wi-Fi, and it would provide access to things like Netflix, Hulu, any kind of streaming, YouTube, any kind of streaming television. Now, as somebody who was an early adopter of these devices, and I cut the cord and I haven't had a cable subscription in well over 10 years. In 2012, when every large hedge fund on Wall Street owned Viacom and CBS, I was realizing, wait a minute, streaming television is going to completely disrupt this business. And, I've had streaming devices from Apple, from Google, from Amazon, and from Roku. And the Roku devices, they were good devices. They are good devices. But it was very hard to see that anybody had any kind of sustainable advantage. And then what ended up happening is now every smart TV basically comes equipped with this functionality, right? So if you go buy a Samsung TV or a Vizio TV, you plug the internet right into the television and you can get pretty much all of those same streaming options.
Yeah, and just to clarify a little bit of misspoke on the headline. So wasn't an acquisition of Roku by Walmart, but actually Walmart making an acquisition of TV maker Vizio, which further pushes your point, Gary, of them not only having a private label television brand, but then also now another acquisition that also has its own operating system called SmartCast as well.
Yeah, so that's the key thing. And what's happened here is Walmart, for their store brand of electronics, they have a store brand. I think it's ONN. I don't know if they pronounce it ONN or on. I haven't bought a TV at Walmart. But what they did was they went to Roku for the operating system. And so if you were to buy an ONN TV from Walmart, you turn it on, and the functionality that allows you to stream directly from your TV instead of using, one of the devices that we were talking about from the different manufacturers, that software, that operating system is provided by Roku. And so Walmart announced the acquisition of Vizio. And the reason this is a threat to Roku is because Vizio has its own software called SmartCast. And so they haven't announced anything at this point, but I think it's really reasonable to assume that as Walmart um, starts to incorporate and finish its acquisition of Vizio and bring them in house, they're much more likely to use that SmartCast software across the Vizio brand and the ONN brand, or shift that business, the ONN business, entirely over to Vizio. I'm not sure how they're going to handle it, but it's hard to believe that Walmart would have acquired this and is going to continue paying Roku. That caused Roku's stock to crash as a result of that, and very weak guidance that was provided when they gave their fourth quarter earnings announcement a couple of weeks ago. That stock is down 35% this month. So
Yeah, and I think the
it's,
call out there, just the lack of differentiation you mentioned too,
yeah.
right? Is what at the end of the day are you really getting with Roku that you can't get elsewhere?
Yeah, and that's the thing. That, and I've used Roku devices. They're good. They're
Right.
legitimately good. For me, I like the Amazon Fire TV and Fire Stick devices
Hmm.
for one reason: is you can hack them. You can sideload software on them. You can get them to do stuff they're not supposed to do. Whereas Roku, they've got their system locked down, which is entirely their right. But if somebody's going to make a hackable device, and the whole point of streaming TV is to not be bound by what the cable company is going to offer you, then go with the creative answer if you're tech minded. And that's, you can draw your own conclusions.
Great. Moving on, last thing of this week's version. After decades, the Nikkei hits a new record, sort of, we will say.
Yeah. So the Rob is talking about the Japanese stock index. This is their version of the S&P 500 or the Dow Jones Industrial Average. And it last hit its high in 1989. And from
Correct.
what I've seen, I think these guys set a record at 35 years for the longest period for any industrialized country between highs on their stock market. And so last week, they finally overtook the 1989 high. Here's the issue, though. We had a DKI intern, Andrew Brown, pull a chart of the Nikkei index, but in US dollar terms. And that's actually down over the last 3 years. So what's happened is the value of the Nikkei has gone up in yen, just as the value of the yen has gone from about 105 to the dollar to 151 to the dollar. So you don't really have an increase in the buying power of the Nikkei. What you really have is the yen sliding against the dollar. And the tagline on this, which really makes a lot of sense because it's the index is right around 40,000. It's just under it. But basically 40,000 yen in 2024 does not buy what 40,000 yen would have bought you in 1989.
What's the sentiment, Gary, just in general terms of, what either the Bulls or the Bears are saying, right? Is it a situation where the Bulls are looking at this as a spin from a positive standpoint? And then how does the market even react, or what is their take? Or do they even realize that this is the case and why they're sitting at this high?
So I think I think people are very focused on the fact that the Japanese went 35 years between highs. I think people are realizing, my God, this is just taking forever for a recovery. The more interesting part about it is there was a lot of talk last week about Warren Buffett's, very smart acquisitions of a whole bunch of Japanese companies, or stock and a bunch of Japanese companies a few years ago. And those stocks are up a huge amount in yen terms. Now, I don't know what his cost was on this. So, we're looking at the Nikkei index. And so some people are saying, my God, that index is up. In fact, hold on, Rob, I've got the chart here. If we go back just a few years ago, that index was right around 20,000 in 2020. It's almost doubled in the last 4 years. Now, that sounds amazing, right? But when we take a look at this, if had you bought that, would you have been up? Not in dollar terms, you wouldn't have been. So the only way to have made those huge returns is you had to either take yen currency risk, which has been a giant disaster, or you had to hedge that risk out, which is expensive. The point of all this is it's very easy to look and say, the index is up in yen terms, it's doubled, everyone's done really well. But if it's doubled in yen terms, but the value of the yen has come down, it's not up as much as people think. And if you're going to make these bets, then you really need to understand the currency risk that you're taking and understand that if you hedge it, it's going to be expensive and you could lose on the hedge. But if you don't hedge it, then you're not, those returns aren't really doubled again in dollar terms.
Great. Gary, thanks again. That concludes another week of this week's Five Things. Any final closing thoughts just as we roll into this week, what the market's looking like, how you feel about it, anything to add?
Yeah, we'll have more inflation data coming in this week, more economic data coming in. We're at the point where some of the earnings announcements are starting to slow. So, the last couple of weeks, there's been a lot going on in terms of company earnings. We'll see what happens during the week, but I suspect next week's Five Things is going to be a little more inflation, GDP, manufacturing, and macro oriented. But stick around. We'll see what happens during the week. I don't know how Tuesday through Friday are going to play out yet. We got through Monday well.
Yeah, that's the best part of this, as always. So, no matter what happens, though, just be sure we'll have you covered on our weekly episode of the Five Things. Gary, thanks so much again for obviously your input and value. Thank you to Andrew, too. I know who's been doing a lot of great work on the DKI team as well. As always, please head to our website, deepknowledgeinvesting.com. Sign up for a free subscription if you haven't already. We'd also love consideration for premium subscriptions, which would give you access to all of our research and data and information, as well as current recommendations and stock portfolios that Gary is managing. So really appreciate your support. If anything, like, comment, sharing, following, that goes a long way for us as well. And we appreciate all of your support in the DKI community. Gary, any closing thoughts?
No, just for everyone watching this, thanks for your time. We know it's valuable. Everyone's got a busy week, and we appreciate you. Thank you. And Rob, thanks for doing this with me. Great seeing you.
Yeah, it's a blast. Thanks so much, Gary.
Bye, everyone.